Forget Tesla. Should you buy Lucid stock? We'll talk about that and more on today's show. What is going on, investors? Hopefully you guys are doing well out there. It's time to talk about Lucid Group. This company just reported their third quarter earnings and their financial results. We'll take a look at that. I tell you what, we'll take a look at their slide presentation here. It's where I found the easiest access to their financials. We'll take a look at that. That's only about 20 slides long. We'll zoom through that as fast as we can. We'll go back in the Wayback Machine and compare a little bit to Tesla back in 2011. These are the oldest financials I could find on Tesla. Just wanted to bring these up for just kind of reference sake. We'll take a look at the stock charts as well. We got Tesla up here, which we might talk about to a certain degree, but we're absolutely going to talk about this Lucid chart because this thing has gone off the hook, baby. This thing is flying. We'll talk about what that means from a technical perspective. Now, what I want to talk about with Lucid today is they just came out with their third quarter results. They say that customer reservations grew to about 13,000 in Q3, but you factor in a couple more weeks. Now we're into Q4. A couple weeks have passed. The company says now they have 17,000 reservations for their cars, which we'll take a look at in a moment here. Now, what I think is the most interesting part about Lucid is this company is choosing to build everything. I mean, we're talking about everything from the ground up. Even Tesla did not build all their manufacturing facilities from the ground up. In fact, I think they bought one out here in California that might have been like an old Chrysler plant. So they chose to go kind of get the existing building already and then hit the ground running. This company is actually literally putting bricks into the ground, building these out from scratch. And so I thought it was interesting how slow this appears to be going. Okay, so they're breaking ground on these facilities out in Arizona, and we saw that their production capacity right now is about 34,000 vehicles per year. Now, just kind of as a frame of reference, I pulled up some sales numbers of Tesla. I've got them going back to here to about 2016. The company delivered 75,000 vehicles. So just give you a little frame of reference. Tesla was delivering about 75,000 vehicles about 5 or 6 years ago. Lucid is looking to do about 34,000 vehicles in the year. They're hoping to get there pretty soon, but their capabilities are tapped out at about 34,000 cars per year. Now, they're kicking off their expansion of this production facility, and this manufacturing plant is expected to deliver over 90,000 vehicles per year, but that's not until the end of 2023. So they won't have a factory, and this is all on paper. So if that's with everything goes well, obviously with construction and financing and everything, well, they won't have the capabilities to do 90,000 vehicles until about 2023. So that's very close to about 100,000 vehicles. That's about where Tesla was back in 2017 when the company delivered 103,000 vehicles just 4 or 5 years ago. So Lucid is ramping up pretty quickly, but they are literally building this out from scratch, and that is not necessarily something that we even saw Tesla do from the very beginning. Now, let's jump into this slide deck. These cars are obviously very beautiful, very nice looking cars, okay? The company has very nice branding. I like what they do, and you might say, well, that's not anything an investor should pay attention to. Well, no, I think it does. I think if the cars looked like crap and their branding was bad, well, I wouldn't want any piece of the stock. I think these are pretty good looking cars. I like the branding and everything. Now, the start of production literally just happened. We're talking about weeks ago. So this company is likely going to get a lot more press and a lot more free marketing to a certain degree when their cars are out on the road. People are taking delivery. That's kind of how Tesla got the ball rolling on their cars as well. Then, like we talked about, the reservations for the cars are greater than about 13,000, but greater than 17,000 if we factor in all the way to the current date. That is about $1.3 billion worth of estimated bookings. Now, one thing I didn't show you is this company has a $71 billion market cap. And like we talked about, this company is building everything from scratch. Right now, they have about $4.8 billion worth of cash on hand. They are going to burn through that, and they're going to need more. I'll show you that here in a second. That's the other reason why we brought up Tesla's financials as well. So the company is building out these manufacturing capabilities. They need to add about 2.8 million square feet. Think about that. They're going to build out this manufacturing to 2.85 million square feet, and it's not even going to get you to delivering over 100,000 100,000 cars. Just shows you how much space this thing needs. Now, they have innovative in-house designs, all this stuff. I guarantee you there's EV videos here on YouTube that'll explain this stuff way better than I could. All this stuff looks fine and dandy, but by the time you deliver 100,000 cars, where will your competitors be? And so that's something that you always want to ask yourself when you look at Lucid. You might geek out on this battery technology. The range is over 500 miles. I mean, it basically, poops on a Tesla in terms of range, but how long will it take for them to deliver a massive amount of cars, and where will Tesla be on their range? Not to mention like a Ford or a GM or maybe even a Mercedes or an Audi. Now, here's the manufacturing facilities that they're building. Like we talk about there, they're literally, going in the desert and building these things up out in Arizona. Very, very impressive, but also extraordinarily expensive. We'll talk about that when we hit the financials. We also talk about how they're going to the direct-to-consumer model, just like Tesla. Tesla basically printed the blue book for all these companies. That's why we actually would expect, like a Lucid, like a Rivian, we would actually expect these companies to scale up faster than Tesla, because Tesla was kind of a groundbreaking, okay? They had to make all these mistakes and pay for them, whereas Lucid kind of sees the mistakes that they made, and they might be able to avoid some of the pitfalls that Tesla fell into early, and maybe some of the money pits that they fell into. Lucid is basically following the exact same model that Tesla is doing, and they're probably going to reach scale faster than Tesla did as well. Here's a summary of the financials. I'll talk about these more in depth here. We'll get a better view of them, but obviously cash and cash equivalents probably the most important line item on this company's balance sheet, since they are deciding to do literally everything in-house. Cash and cash equivalent is going to be king. And now they say they have unprecedented media coverage. Tell you what, if you're a car brand and you're not getting any media coverage, you just start paying these magazines and paying YouTubers and paying anybody to do coverage. This company probably does a mix of that, a little bit of that, but since their cars are kind of groundbreaking and pretty good looking cars, my guess is they're getting a lot of free press as well. That's something that Tesla has benefited from as well. So here, they just delivered maybe 150 cars just a few weeks ago. Absolutely beautiful cars. If you like sedans, I think you would like this car. Looks very much, in my opinion, like a Model S. Here they are going public. That's very important for this company. Again, a little bit more marketing, a little more branding. Look, this stuff looks cool, right? Okay, but it has nothing to really do to making yourself a great investor. But we are seeing cars roll off the line, which is impressive for an EV company, okay? The cars look absolutely fantastic. Now, what is also looking a little fantastic at the current time, right now as we speak, is we got this $4.8 billion of cash on the balance sheet. That was raised by selling stock of this company. So I want you to keep in mind as we walk through this video with Lucid, probably the most important thing to realize is this company is going to have to raise way more than $4 billion, because if we take a look at this, take a look at their property, plant, and equipment. This is what they recognize on their balance sheet, is at $965 million. And this is a company that hasn't even broke ground on their expanded manufacturing capabilities to get them up to about 90,000 cars per year. So you can imagine over the next year how much this company is going to be spending on property, plant, and equipment. I tell you what, the vast majority of this $4.8 billion that doesn't go to executives, that doesn't go to salaries, will be going to build out property, plant, and equipment, because this company's not really spending money on marketing. They're not really spending their money on those types of things. And so they are going to need this property, plant, and equipment to just continue to go up and up and up in order to meet the delivery needs that this company needs to get to. And we say they need to because they have a $71 billion valuation and they've delivered just a few hundred cars. Now, here's our statement of operations. Somewhat insignificant, I guess, to a certain degree. So we have our revenue up here. These are in thousands. So when you see revenue of 232, this is just $232,000. Some of you probably have a salary that is better than that in a full year. Now, this is for 3 months over at Lucid, but you see for the 9 months, it doesn't paint much of a better story. Again, this is a company that's literally just starting to get off the ground. That's why it's impressive when you see these big old gigantic manufacturing plants that they're building. I mean, they're building these big, old, gigantic things, and they literally have sold just a handful of cars. So this company is all in, and they're all in on the backs of investors, because take a look at this. Before we run through the financials a little bit more, I want to emphasize that if you are early to this stock, you are going to be diluted. Okay, take a look at the weighted number of shares outstanding. Just last year on a 9-month basis, you had about 20 million shares. Now you got 432 million. And if you think that is going to slow down, you're absolutely dead wrong. This is going to double, triple over the next year. This company just is going to have to continue to be in fundraising mode. I don't think anybody is going to be surprised by that, but you should be surprised a little bit when we look at the Tesla chart here. When we bring up the Tesla stock chart, there's a reason why I have it on here. Okay, Tesla was in fundraising mode from 2013, even into last year, but mega fundraising mode from 2013 to 2019, and you see what the stock did. It literally didn't do anything. And so it's something just to kind of keep in mind when we're in these early stage companies, how much dilution is going to happen. Now, we do have our revenues in the most recent quarter coming in at $232,000. Unfortunately, the cost of revenue on that was $3.32 million. So I tell you what, you get in one of these Lucid Air cars, it's costing them way more. I mean, you're getting a smoking hot value on a car because it's costing them way more, to the tune of $3.3 million to put those cars together that they delivered. Just absolutely insane. Again, not necessarily something unexpected, but you have negative gross margins, okay? And I tell you what, here on the Investor Channel, it's the biggest thing that I'm trying to get you to realize as an investor is you need to create a system, okay? Because it's one thing to pick one stock right and make money, and maybe a second one, but you need to do that time and time again, year after year after year. In order to do that, you need to create a system. And my system just filters out automatically companies that have negative gross profit. I have absolutely no interest in buying this stock today. Now, I could have interest in buying this stock in the future, so we'll keep things going, but I just want you to know that companies with negative gross margins, where we take revenue minus just the cost of that revenue, we haven't factored in R&D. We haven't factored in selling general administratives, okay? We haven't even touched these expenses yet. I can understand this company is absolutely going to lose money from that perspective. And in fact, when you come over here to Tesla and you take a look at this company back in 2011, this company was losing money from an operating perspective, okay? In a quarter, they lost $81 million. For the 9 months, they lost over $250 million, over $250 million. In fact, over $250 million. Okay, so this company was absolutely bleeding money back in 2011. That's probably the only reason why I have Tesla up is I just want to emphasize that this company, Lucid, is just going to be, money is going to be flying out of it, okay? Like that meme with the Federal Reserve Chairman, money is just going to be flying and flying out of this company's coffers, okay? So just keep that in mind when we go through these. And if you want to step in this one early, just understand, man, there's going to be a lot of fundraising in this company, okay? So we've got research and development fees coming in here at $242 million. Those are more than double or so, almost more than double than last year. Selling, general, and administrative, I tell you what, you went from 27 up to $250 million. You got your total operating expenses coming in at $500 million. So your loss from operations was $500 million, $497 million to be exact. Oh my goodness. Take a look for the last 9 months. You've lost over $1 billion. Yes, for 9 months, you've burned through $1 billion to sell just 719,000 cars over at Lucid. So this is why when we talked about this cash and cash equivalents, okay, a lot of this is just going to be blown away by operations, okay? Your R&D staff, your selling, general, administrative, building things out. I mean, that is before we really build out this factory to get to 90,000 vehicles. This company is going to need way more than $4 billion. And how are they going to get more money? They are going to sell more shares of the company, because when you look at the stock chart on this one and the valuation, you might as well do exactly what Tesla did. Although Tesla did take on some bank debt, but that's exactly what Tesla did in order to scale up their model. Moving on to cash flows, not a whole lot to see here other than the company raised a lot of money in the equity markets, okay? They raised $5.2 billion, but they still burned through a ton of money in the most recent 9 months. operating the business. So this is a company that is just strictly going to continue to lose money time and time again over the next few years. That is something you have to be absolutely very, very comfortable with. Now, the last thing we'll say about Tesla is you did not have to be early to Tesla. Sure, would have been nice to buy in from 2011 to 2019 at a split adjusted price under $57 per share. Of course, you'd be absolutely smoking risks, but you would have taken a lot of risk on as well. You've also had times just in the last year or so where you could have doubled your money on Tesla. In fact, just earlier this year, earlier in the summer, Tesla was a $550 stock. Now it's trading up over $1,000 per share. So just keep those in mind. I know when you're into the stock market, it's exciting to own companies like Lucid. It's exciting to have companies like this in your portfolio, but think about your sizing with a company like this. Okay, first of all, I don't think you have any business owning Lucid unless you don't have a full allocation of Tesla. Okay, and when I say full allocation, this is different for everybody. Okay, if you have a $10,000 portfolio, if you have a $100,000 portfolio, your the amount you put into Tesla will vary greatly. Okay, decide how much you want to put your money, your portfolio into electric vehicles. I think the vast majority of should be in Tesla. And again, the stock performance over the last year is well north of 100%. So it's not like you can't make money in the old dinosaur that is Tesla. And then Lucid and all these other startup EVs get the crumbs, essentially, until they can start proving themselves, okay? Because look, Tesla proved themselves over many, 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 many years, and the stock literally didn't do anything, okay? Yeah, it waved up and down, but it's nothing when you factor in over the last, basically the last year or two, the stock's gone from 140 up to 1,000. So I absolutely would expect if Lucid could scale up and to be a very close competitor to Tesla, maybe even exceeding them one day, this stock could just rocket way higher. But if this stock continues to fail, if this company fails on its execution, just like Tesla has in the past, the stock would come down, and it would come down very hard. Now, in the shorter term, from a technical perspective, this thing is looking absolutely beautiful. I mean, this is like a sunny day out here in California. You got about 80 degrees, no breeze. This is exactly what you look for when you're talking about a stock chart. This thing's rocketing higher. There's not a lot of candles over here to support it. Sure, we've got the all-time highs here up here at $64, $65 per share, but this thing's basically on a breakout, and it's moving higher. You're looking for pullbacks on this one. The obvious areas to me, probably the most obvious, is all the way down here at about $28 per share. Now you're probably saying to yourself, well, there's absolutely no way that can happen. Yes way. This type of stuff can happen, especially when you factor in macro stuff, interest rates, tapering from the Fed, potential double dip recession, all those things, real estate. You can factor in that a high-flying stock like this can absolutely come down, because I just showed you another high-flying stock that has done a very similar thing. Just a few weeks ago, Tesla was up here at about $1,200 per share. We've traded off about 20% on this one. Now we're trading about $1,000 per share. So absolutely it can happen. You could shave 10, 15, 20% off this share price very quickly. It could get you down to an area of support, I would say between $28 and $30 per share. That'd be the first place I'd even think about buying a stock like this, but I'd want my full allocation of Tesla. And I tell you what, Tesla on a dip, that looks like a little bit more attractive investment to me at the current time, but I'll definitely keep Lucid on my watch list. And we will be watching if this company can scale up these manufacturing capabilities. Can they do it quickly? Can they do it without hiccup or without any delays? If they're able to do that and continue to prove ourselves, look, we got until 2023 until this company can deliver. Okay, it's not that they're going to, but that they even have the capabilities of delivering 90,000 cars. And we saw that Tesla did that 6 years after they were a public company. We got plenty of time on this one. Pump the brakes, put it in your watch list. You've got just an unbelievable $71 billion market cap on this one. You got 10% short interest on that. That'll keep piling in as the stock continues to make a parabolic move. At some point, that rooster will come home to roost, and you will potentially be able to buy the dip on this one. That was Lucid. Hopefully you guys enjoyed that video. We'll be back again soon with more. Good luck with your investments.